Okay, so we're going to talk taxes today. I want to just run through it from beginning to end. Questions while I'm jot them down. We'll do Q&A at the end. So I'm going to start. So basically, and you guys are going to receive a 1099 form. Super easy. You just plug it in if you use TurboTax. We use TurboTax, so we just plug it in. It basically does it for you. Questions, and you just if you have taxes and have them done, just bring your 1099 form with you, your tax consultant, and they'll do it for you. So that's the form you'll get. Beachbody will send that out to you. They're really prompt. I think we got ours in January. So I'm going to give you guys some examples throughout the year. Keep track of. So things that you can write off. These are big because you like money you don't have to pay in. Look at it. So I keep track of. I buy from Beachbody. Equipment, psychology, monthly, any supplements that you buy, you can keep track of year. Basically, anything you purchase from Beachbody, keep track of that. And then your workout clothes. So, like if I go to Target and spend $5 on and a few tank tops, keep that receipt and file it, and then at the end of the year, plug that in. Your shoes, I don't know about you guys, but Corey and I buy shoes like every
4 or 5 months.
4 or 5 months, depending on the program. So, and that's at depending what you buy, $100 a pop. So, shoes are a huge one. So just keep all your receipts there. Another big one, especially for Beachbody, because we do a lot of trips, will be all of your trips. So I'm going to just give you for example, when we went to Summit this year, we live an hour away from the airport. So in my truck, I keep a little calendar where I can write down my mileage. So when I'm leaving the house, I write down my start mileage, and then when I get to the airport, my end mileage, because you can write a certain percentage of your gas and your truck, like my maintenance, like my oil changes and whatever I need to do throughout the year for maintenance. So I just document that and I keep that in my truck, and then at the end of the year, I take that in with me. And then so we have to leave our truck because we have nobody, dropping us off. So that cost us, I think it's here it was $5 a day. So it's $20. So at the end, I get a receipt for that and I keep that. You can write off your plane tickets. So basically from the time I leave the house for a trip to until the time we literally come home, I keep every single receipt. Everything. If I go to Starbucks, I keep that receipt. Anything you eat out, any lunch that you eat out, you keep that. Just any
purchase on the business, except for drinking, obviously.
I mean, if you go out to dinner and you have a drink, that's one thing. But if you go to the country bar and sit there for 3 hours, we wouldn't write that off.
Yeah.
But so that's an example, like what we did for Summit. So that ends up being quite a bit of money, thousands, including your hotel room and your plane tickets. That right there is, so that's a good chunk. Same thing for when we went to Cancun. So yeah, that was paid for. Beachbody paid for that all inclusively, but we still had to pay for our plane tickets and getting there and the food we ate, getting there and coming back. And for us, we got stuck in Houston No, we got stuck in Denver, had to pay extra and stay overnight, so we'll get to write that off. So just when you're on your trips, just be mindful and file all of your receipts. When we do trips, I just take when I get home, I just have like one manila folder that I put all of my receipts, like first Summit. I just have a manila envelope, then I keep all of that. That way I know, okay, this is everything that I did with Summit. That way it helps keep me a little bit more organized, because I do have a file that's like receipts for my shopping, Corey and I's shoes, whatever. But like on a trip, you're going to have a crap ton of receipts. So I like to keep those separate. That way I can know, okay, this isn't random. I didn't just stick this in here. It's from Summit. So those are the main things to write off, to keep your receipts for. Another very important thing to keep in mind as you are getting your checks weekly from Beachbody, you don't get taxes taken out from that. You're responsible for that yourself at the end of the year. So like, for example, like my regular job, I get my taxes taken out of my check, and I don't have to worry about that at the end of the year. I just file my regular taxes and it's all taken care of basically for me. With your Beachbody checks, they don't do that. They say you made $330. Here's your $330. It's for you to decide what you want to do. So a good rule of thumb that we use, and it's different per state, is we take 20% of everything that we make and we put it aside in our savings account, so that at the end of the year, when we do our taxes and we owe, say, $890, then we have that. We've already set it aside. It's not coming directly out of our pocket like that month, say. So that is something that we really have learned over the past couple of years, because it varies. It's basically, it's however much you make, you want to make sure that you have that amount of money in taxes, because you're responsible for that, and nobody will tell you that. That's why we're here telling you that.
Yeah, my first year I only pulled about 10% out, and then I ended up owing way more than the 10%. So it was a wake-up call, and it ended up being taken right out of our bill money. So
like out of our regular job money.
So just make sure you are diligent and put a little chunk away every time you get paid. And then at the end of the year, when you do all your write-offs, you might get a lot of that back. You might be able to keep a lot of that, but don't bank on it. Just pull the 20% out regardless, and then do your write-offs, and then hopefully you'll be pleasantly surprised and you'll be able to keep half of it or something.
Right.
You know what I mean?
Yeah. So that's really all my tax 101 for you guys. Do any of you guys have any questions?
I do have one thing to add. You can write off percentage of your cell phone because you do use it for business. You can write off your internet because you use it for business. If you purchase a new computer, laptop, tablet, cell phone, you can write off a percentage of that, which TurboTax or whatever will do the percentage for you. And you can also write off a home office. So if you have a designated room as a home office, it will ask you the measurements of the room, what you have in the room, and how much time you spend in the room. And they will actually
calculate that for you.
Yeah, and that's one of the biggest write-offs is a home office. So I would definitely, if you don't have one, I would do it because it help, they do it for like your utilities, like everything.
Like it's a percentage off of everything
of your house. So the home office is a big thing. So definitely designate a room and then have that to be able to add into your write-off as well, because that will save you a ton of money. Okay.
Yeah. Any questions, you guys? No.
No.
No. Do you all do that? Do you all take care of your receipts and do your 20%? And Michelle T, you've been doing it a while.
Yeah. Receipts. I don't have the 20%, but I need to start doing that.
Well, you're in Florida. You don't need 20%.
Yeah, you're lucky.
Florida's lucky.
I don't know what the hell. I don't know what our taxes are actually.
It's what the best state. It's the best state to live in if you own your own business.
If I get much bigger, we're literally probably going to move to Florida because the taxes in Washington are so ridiculous. Like, let's just say, for instance, Justin, you know how he won the Beachbody Challenge and I won $1,000? Well, really, I only won $750. Because Uncle Sam gets to take $250 of that. I mean,
do you charge you guys on winnings?
That's taxes. I have to pay that.
Yeah, everything you make. Like my regular job, I'm a manager at a coffee shop, so we make tips. That money that comes in has already been taxed because that's somebody else's money that they're giving me, basically. I have to claim that and pay taxes on that, and it's like 25%.
It's stupid.
That's another Canadian perk, I guess.
Yeah,
we don't pay taxes on winnings.
Yeah, see, everything. So I've won $1,500 from Justin, and really, I'm only going to get to keep about 1,000 of it. And the government, basically, the government got my first $500 winning, and I got $500. Like, that's how ridiculous it is.
Pretty much. So just a little to add to it, Corey and I were able to, last year, we made a lot, but we spent a lot on the business, on trips and everything. So we were able to write off quite a bit of our tax deductions, if you will, at the end of the year. So it's important. Don't blow that off.
I would have probably owed about $8,000, and I didn't pay anything because I wrote off enough stuff. I mean, eventually, when you get too big, there's no way around that. But
that's just how
that was money that was in our savings account that we got to keep because I had enough stuff to write off. So that's another thing I've been telling a lot of the coaches too. Don't hold back on spending money on business stuff because it's expensive or because you don't want to spend that money because it's going to end up going to the government anyway. So why not spend that money on yourself and your business and get something of value from it instead of giving it to the government? That's how I look at it. So I'm not cheap when it comes to stuff. Like, people worry about automatic CEO. Okay, well, yeah, it's $25 a month, but that's $25 a month that I would have had to have paid the government. Or the same thing with my blog, the $45 a month. That $45 a month would probably be going to the government, but instead I'm getting a professional website out of it. Like, spend your money on things of value that you can write off so that you don't have to give it to the government. Does that make sense?
Yeah. Another thing too is you can write off all of your ads. Don't forget. So if you're running ads,
Facebook ads, any of that stuff,
ads.
Anything to do with your business.
Yep.
I mean, Buffer, $10 a month. That's a write-off. All that stuff.
Of course, all your business, your Beachbody business fees.
Yep, the $15.95 I write off. I write off the Shakeology. Everything. So you guys have any questions?
Comments, concerns?
Now, I know over in one of the other groups, I don't know if it was, I don't know if it was Engaged or another coaching group, but I know a lot of them over there were saying they were tax people, and it depends on who you get to do your taxes, because I know some people get somebody else to do it. They will let you do.
What?
They say that. Yeah, a lot of people say they cannot write it off.
They couldn't write it off?
Huh?
Yeah,
but their tax person told them not to.
Just think about it this way. You get audited, okay, and they want to know why you're writing off Shakeology. Well, you can say, I don't drink it for personal use. I use it as samples, and I have to have a minimum order to keep my business active. How is that not a business write-off? You see what I'm saying? I think people – it depends on how conservative you are. There are very, very, very conservative tax people, and there are aggressive tax people. I'm right in the middle. Casey, for instance, is very aggressive. She goes farther than I would go, like writing off almond milk.
I don't suggest that.
You know what I'm saying, though? Like, I mean, that's up to her. I don't want to go that far because, I mean, that's going to start raising some questions. But I mean, the Shakeology and stuff like that is a business expense. You have to have 90 PV to stay active, right?
Right.
Or you have to have your minimum order. Okay, let's say you have 90 PV from somebody else ordering from you. Well, you still need the 90 PV to get your free leads, your Shakeology leads for hitting Success Club. So therefore, it's a requirement to move your business forward. So therefore, it's a business expense.
Right.
So the government's not going to audit a tiny little Beachbody coach that wrote off a Shakeology order.
Right.
You see what I'm saying?
Yeah.
People are just paranoid. You guys can do whatever you want to do, but I can promise you it's a business expense.
Oh, I want to write off everything I can.
Yeah.
Your whole core experience, you need to write.
Yeah.
That's a big write-off,
That
though.
is, it's
That's
huge.
$1,000 right there that you saved.
Your size.
That's why I spent the money. I was like, I just write it off.
Yeah.
Your size certification, write that off.
Yeah.
Yeah, I mean, like I said, some people are so aggressive with their taxes and some people are so conservative. And you can be conservative if you want, but I think you're cheating yourself when it comes to stuff like that. Because, I mean, who's to say that I don't buy the Shakeology to give it to people for samples?
Right.
That's a business expense. You know, just like I order stuff from Beachbody to give away for prizes for our VIP group. That's a business expense. That's not personal use. So who's to say that I'm not doing that with the Shakeology or anything else? And anything you mail to your people, save the receipt. That's another write-off. Envelope that you put it in or a box, that's a write-off.
So it's relatively simple. Like, I don't know what you guys do, but I just keep folders. And like I said, I keep my little calendar book in my truck. And I have like a little special purse zipper thing that I bring with me on my trip. So that's where all my receipts go while we're out. And then as soon as I get home, I just put them in my little filing cabinet, and it makes it easy because we do our own right now. I mean, we probably won't for very much longer, but maybe one more year, and then we'll maybe have to have someone else do it. Getting a little complicated with two of us, but I say do it yourself.
Yeah. If you already do it yourself, it's not that hard.
It's not.
So, any questions?
My mom mentioned to me she used to do accounting to me that if you declare a home office, you need to have a business license with your or county or state or whatever. I don't know maybe state specific. I don't know.
Yeah, I was going to say maybe that's your guys' state. I know in Washington, you don't have to have a business license. You just have to be, you basically are a business without a business license with this. And you can get one too. It's not a big deal. Like Greg, since he's gotten so big, he actually turned Engage into Engage Home Fitness LLC. So he has like an actual, it's like a corporation now. You know what I mean? But you shouldn't, at least our state, you don't have to have a business license to claim an office.
Okay. I'll check on that.
You should be able to claim an office because you are doing at-home work. You're doing work from home, and your 1099 proves that. That 1099 based on an at-home job, if that makes sense.
Yeah.
So therefore, you have to have an office. So I don't see, maybe if you were doing an actual business, but this is like in between. You know what I mean? You should be able to write that off, 100%.
But that might be per state. Every state has its own. Like Washington's the highest income tax there is percentage-wise, where Florida doesn't have an income tax.
But I've talked to so many people in the Engage, and everybody writes off an office. I've never heard anybody say.
Okay.
Definitely check into that, and I'd be interested to know what she says or what you find out.
Yeah, my mom's a stickler with all that stuff. So when I went to talk about personal training, and I was like, because I started out doing that trying to do that first. And then she was like, well, if you go out to the park in the middle of the city and you don't have a business license and you've asked those people for $5, then you're technically a business. And I was like, oh, I didn't think about that. And then you have like you have state, you have county, and then you have city taxes, and all of like that's way expensive. So my thought was just I'll just do it for as long as I can before I get caught.
Even as a personal trainer, you don't necessarily need a business license to run. You know what I mean? You can still turn it in as income because when you do your taxes, it tells you, do you get income from other sources? Doesn't necessarily mean you have to have a business license to get income from other sources. You just have to claim it. That's all the government cares about. You know what I mean? Mm-hmm. Well, as a personal trainer, what's important is having insurance and insuring yourself in case you hurt somebody, then you're screwed. You see what I'm saying? Mm-hmm. Having a business license, though, that's not illegal. It's not like you're not legally binding having to do that. You know what I mean?
Yeah.
Enough said?
Is that it, everyone?
I don't have anything.
Okay.
I'm good.
Okay.
Shelly, why can't we see your face?
I have no idea. I'm on my phone. I don't know what it did.
Okay.
Okay.
Well, thank you for showing up. I hope it was helpful.
I know the strong and steady
It was.
show up.
Okay.
Good.
All right, next week, everybody better start showing up.
If you ever have questions, don't hesitate to ask because we have been doing this for a few years now. So we probably ran across any questions that you might have. We probably will be able to answer them. If we can't answer them, we can figure out how to answer them. That's all.
Oh, I'm sure you'll get a ton of them come January, February.
We probably will. That's fine.
Yeah. I'm always so glad when it's over. I'm like, yes.
All right, guys.
All right. Good night.